Fellow Sapiens, welcome back. Today we will be valuing Bitcoin using the quantity theory of money. There are many ways one can go about valuing Bitcoin, but for today we will entertain this route. And it is important to note that this theory might not be directly applied to valuing Bitcoin. However, it serves as a good starting point. We will also keep it short. The quantity theory of money is pretty simple. The equation is simple and goes as follows: MV equals PT. M is the money supply. V is the velocity of money. It is simply the rate at which the average unit of currency is being used to purchase goods and services. P is the price level. T is the volume of transactions. Now, let's rearrange the equation to get P equals MV over T. But we now need to use the inverse of this to get the price of Bitcoin in terms of BTC USD. Let's figure out the inputs. Money supply is easily determined as Bitcoin has a hard cap of 21 million units. This number is obtained from the fact that the number of Bitcoins generated per block decreased by 50% for every 210,000 blocks, or around 4 years. The total number of coins trend to a mathematical limit of 21 million, and we are approaching that number soon as there are around 18.7 million in circulation at the moment. For velocity, we could use the traditional M1 and M2 money supply. But that's less relevant to our case. The USA velocity of M1 money supply is around 5.4. whilst that of M2 has been around 1.5, before the pandemic happened. It is estimated that the velocity of Bitcoin is around 1.25. The fact that the velocity did not increase as much as compared to previous bull runs hints to the shift in Bitcoin being used as a means of payment to a store of value. As for the volume of transactions, it is hard to pin a number on it. Bitcoin use cases worked well for the shadow economy due to its anonymity. The IMF estimates the average size of the shadow economy to be around 31.9% of global GDP of $87 trillion. But the data shows that the percentage is much less for developed countries, in the 20s range. Now, of that, let's assume that Bitcoin is used to conduct 10% of the transactions in the shadow economy. I am simply using the shadow economy as an example. When Bitcoin becomes widely accepted amongst regular merchants, the share of total GDP conducted through Bitcoin will naturally increase. Piecing all that together gives a Bitcoin price of around $74,000. I also built a sensitivity surrounding the percentage shadow economy and percentage Bitcoin used. Assuming the same 20% shadow economy and an increase in Bitcoin usage to 20% leads us to a Bitcoin price of around $148,000. If we look at the other sensitivity table, an increase in velocity obviously results in a decrease in price. It simply means that Bitcoin is shifting to become more of a means of payment, which should be expected. It then becomes a balancing act between velocity and volume of transactions. We must recognize that we operated under simplistic assumptions. We might explore other models in the future. But for now, let me ask you, where do you think the Bitcoin price will reach in 2021? And why do you think so?